Hello, one and all. This is Kalpana, Assistant Professor, Department of Commerce, Accounting and Finance from Sri Krishna Swami College for Women. Today, we are going to discuss about the topic Introduction to Cost Accounting. Before going into the topic cost accounting, we should have a clear idea about what is the meaning of cost. Cost is nothing but the amount what we spend for a production activity. It includes all expenditure what we spend for producing the number of units which we have planned, and costing the technique or process which is being involved by the organization is known as the costing. And the cost accounting, the process of recording, classifying, analyzing, summarizing, and reporting cost information for internal management. Simply, we can say it is nothing but whatever be the cost incurred for the production process, it has to be recorded properly for the management for decision making process. Before that, it has to be classified according to the different types, and also it has to be analyzed for the decision making process by the management. The proper reporting of the cost information should be submitted to the management so that they can manage, they can plan the cost system. Objectives of cost accounting. The first and foremost objective of cost accounting is to ascertain the cost. It helps us to find out what is the money we have spent for producing one particular unit of the product. Cost control, it helps us to keep the cost within the plan limits so that no money can be wasted. Cost reduction. Cost reduction is nothing but to avoid unnecessary expenses and to achieve the savings through efficiency. Decision making. The main objective of cost accounting is to help the management in decision making process and to plan for the future cost. And the inventory valuation, which is nothing but the valuation of materials, and also it also includes raw materials, work in progress, and finished goods. Scope of cost accounting, it includes ascertainment of the cost which we have incurred for producing one particular unit. Cost control, that is how to control cost within the limits. Cost reduction, how to avoid unnecessary cost so that we can increase our profit margin. It helps the management and decision making process and planning of cost in future. The important scope is nothing but we can evaluate our performance this year when compared to the previous year. The limitations of cost accounting includes the whole costing system seems to be very expensive, and also it is not a substitute for financial accounting. It is based on estimates and conventions which has to be followed strictly. In this slide, we are going to see the difference between cost accounting and financial accounting. The main objective of preparing cost accounting is to ascertain the cost incurred for producing one unit. But the financial accounting is nothing but recording all the financial transactions in a business. The nature of cost accounting is internal and it is maintained for the purpose of management for decision making process. Financial accounting is external and is maintained for submitting to the stakeholders. It is a continuous process of maintaining cost accounting for the management, but financial accounts are maintained in a periodic basis, but that is, it may be for quarterly, half yearly, and especially for 1 year. Cost control and efficiency is the main motive of maintaining cost accounting. But financial accounts is maintained mainly for determining the profit which we have earned in a particular period. And when it comes to the format, cost accounting is flexible according to the organization's policies, but financial accounting has to be maintained in a standardized format as per law. Elements of cost. The three important elements of cost are material, labor, and overheads. Material cost is nothing but what is the amount we spend for purchasing the raw materials used for the production process. It can also be divided into two, direct material and indirect material. Direct material are those materials which becomes the part of the finished goods, that is, which is being used for the production process. Indirect material which does not directly form the part of the product. Labor. Labor is nothing but what is the wages we spend for the human efforts. It can also be divided into direct labor and indirect labor. Direct labor are those human beings who have been directly involved in the production process and the cost involved in it. Indirect labor is nothing but the other people who have been helping or supporting the production process. For example, we can say people who have been involved for supervision, maintenance, etc. Expenses, which is otherwise said as overheads, it can also be divided into two, direct expenses and indirect expenses. Direct expenses is nothing but the expenses which have been incurred directly for the production process for a specific job or a process. Indirect expenses are those expenses which have been incurred not directly or linked into the production process. So to analyze the total cost, we can we can also add the prime cost, factory overheads, office overheads, and selling and distribution overheads, which is going to be discussed in the coming slides. Classification of cost. Cost can be classified according to its nature, function, identifiability, behavior, control, and time. By nature, the cost can be classified material, labor, and overheads together, which helps us to analyze the total cost. By function, it can be the cost incurred for the production process, for administration, and selling and distribution. By identifiability, it may be direct or indirect cost. By its behavior, it may be fixed, variable, or semi-variable. Fixed costs are those costs whether the production activity is being continued or not, these expenses will be there. Variable, according to the units we produce, the cost may increase or decrease. Semi-variable, there are certain costs which are partially fixed and partially variable. By control, there are certain costs which can be controlled and some costs are not controllable. By time, it may be historical or predetermined. In this slide, we are going to discuss the format of cost sheets. Before going into the format, we should know what is a cost sheet. Cost sheet is nothing but it is a statement which helps us to know what is the total cost involved for producing one unit. The expenses of a product are analyzed under different heads in the form of a statement. The cost sheet is very much important because it acts as the basis or foundation to ascertain the cost and determining the selling price of a product. The, it provides details regarding the total cost under different classifications. It provides a cost per unit at different stages. It helps in comparison and control of cost. It is helpful in estimation of cost for preparation of tenders and quotations. It acts as a basis for fixation of selling price of a product. Going into the format, the first and foremost step is to analyze the prime cost. Prime cost include direct material, direct labor, and direct expenses. Direct material are those material which is being used for directly for producing the product. Direct labor is nothing but the human force used and wages are being paid for the production activities. And direct expenses are those expenses which have been incurred for the production process. Together, when we add direct material, direct labor, and direct expenses, we can ascertain the prime cost. With the prime cost, when we add the factory overheads, we can ascertain the works cost. Factory overheads are those overheads or expenses which have been incurred in the factory side. For example, we can say indirect materials, indirect wages, and other expenses which we spend for the production activity. Factory rent and rates, factory lighting, power and fuel, repairs and maintenance, depreciation of plant and machinery, factory stationery, insurance of factory, water consumption in factory, or other examples for factory overheads. So when we add prime cost with the factory overheads, we can ascertain the works cost. Along with the works cost, we need to add the administrative overheads for analyzing the cost of production. Administrative overheads are those overheads which are incurred in the office. For example, we can say office rent and rates, office lighting, office stationery, furniture depreciation, office salaries, legal charges, bank commission, telephone and postages, office cleaning are the examples for administration overheads. So, along with the works cost, when administration overheads is being added, we can find out the cost of production. With the cost of production, when selling and distribution overheads are added, we can analyze the cost of sales. Selling and distribution overheads are those expenses which we incur for the promotion activity. Example, salesman salary, salesman commission, showroom rent, showroom expenses, advertisement, sales office rent, traveling expenses, warehouse rent, warehouse staff salaries, repairs and depreciation of delivery vans, carriage outwards. So, when we add all the selling and distribution overheads with the cost of production, we can analyze the cost of sales. So cost of sale represents the cost of productions plus selling and distribution overheads incurred. Thus, the cost of sales is the aggregate of all the direct and indirect costs connected to the goods sold. When profit is added to the cost of sales, sales can be found. Usually, selling prices are fixed on the basis of cost of sales. It ensures all the costs are recorded and any desired profit is also. Tenders and quotations. Tenders and quotations are nothing but the price at which the items of output are offered for sale. The tender has to be prepared carefully because it may be accepted and goods have to be supplied in future at the quoted rate. In order to prepare a tender, some items has to be analyzed properly, like raw materials, direct labor, chargeable expenses, works overheads, office overheads, selling overheads, and the profit estimated. Estimation of different elements of cost is made in order to prepare the tenders and quotations based upon certain norms. Direct materials and direct costs are generally estimated on the basis of cost per unit of the preceding period, subject to fluctuations in the market price of materials and labor rates. So, percentage of factory overheads to direct wages can be analyzed by using a formula. Factory overheads divided by direct wages into 100. So, percentage of also office overheads to works cost can be analyzed office overheads divided by works cost into 100. So percentage of selling and distribution overheads to works cost can be analyzed. Selling and distribution overheads divided by works cost into 100. Sometimes profit is given as a percentage of cost. In case of profit or for the tender is ascertained, profit is equal to cost of sales into percentage of profit divided by 100 is the formula used. There are certain assumptions to be used in preparing tenders and quotations. Factory overheads to direct wages ratio of the previous period holds good for current period also. Administrative overheads to works cost ratio of the previous period is applicable in current period also. I would also like to add some other important terms in cost accounting. Cost center. Cost center is defined as location, person, or item of equipment for which cost may be ascertained and used for the purpose of cost control. It can be classified into four types: impersonal cost center, personal cost center, operation cost center, process cost center. When it comes to profit center, it is the segment of business responsible for all activities involved in the production and sales of products and services. Profit center is responsible for revenues and costs. It is created for evaluating performance of a division. Profit center has autonomy for decisions concerned with the center. In short, in this presentation, we just learned the meaning of cost,
Costing and cost accounting, the objectives of cost accounting, importance and advantages of cost accounting, scope of cost accounting, limitations of cost accounting, and differentiation between cost accounting and financial accounting, elements of cost, classification of costs, cost sheet and its format, and at last, tenders and quotations. Thank you.